Hello everyone, good afternoon from Rega. So we're about to begin the last webinar from the Stochastic research team for the year. Today is the last webinar, and what we're going to be talking about is how to use stochastic oscillator. That's kind of it's kind of from the continuation of these momentum indicators, because for the last 2 weeks I've done this MACD, the RSI, and now the stochastics. And the reason why I'm doing this webinar, I will tell you directly, is because we already have an article. The article is already the article was done by my colleague, and she already posted it on our website, on Stochastic website, and you can see the article. When you go to the articles, then when you go to the article, then when you click on the article, the use of stochastic oscillator to develop trading strategy will pop up for you. So before I start with these articles, if you have any question, simply drop it on the chat box. I already see some guys there, Habib and MHB, I don't know his name, and Odogans. So if you guys have any question, if you want me to check some currency pairs, feel free. Today is the last my last webinar for the year. I'll be back in January. And don't forget to click on the subscription button and the notification button in order for you to support this channel. We have a lot of guys that teaches how to trade, and we have a lot of guys that kind of make the review of trading too. So it's going to be beneficial for you, not only different indicators. So that being said, I will follow first the articles which is written there, then I will explain from my own point of view. Stochastic oscillator is a popular momentum indicators that signal if an asset is overbought or oversold. The indicator examines price movement as well as speed. Good. That is a definition of stochastic indicators. But in general terms, if I want to sum it up, I will tell you directly that stochastic indicators measures the momentum of price in the market. Yes, MHB, we have the playlist for all the webinar, and the reason why I'm doing this stochastic, you can see we have this widget, and this is kind of a trading signal. And sometimes in our articles or in our trading idea or technical analysis, we always sometimes we indicate a technical indicator provides sell or buy. So this is the reason why we are doing these indicators from the MACD, which I did 2 or 3 weeks ago, to this RSI. I did it last week, and currently we are doing these stochastics. So we have the playlist on the archives. You can brush through it and you will see it. That. So in general, the short definition of stochastic is it measures the momentum of price in the market. It's kind of very simple. And there's a formula for stochastics. Look at the formula which she put there, and this is the theoretical formula. Then I will explain for you the short form of the formula in a little bit while, but let me follow the formula for stochastic is percentage of K equal to CLH divided by H14 minus L14 multiplied by 100. That's the traditional, and the traditional period usually is the 14 days. That is why you see 14. So this is the formula for the stochastic indicator, but you can easily know the values of stochastic indicators and why do you use stochastic indicators. It's kind of very simple. Let me bring out this chart right now, and maybe I jump to one random currency pair. Okay, let me put it like this. take away all the stuff so that this chart will be clean. So let's put it like this. If you want to, get the value of stochastic indicators, it's kind of very simple. How does it work? It's usually the range divided by the high and the lows multiplied by 100. That's where you get the value of the stochastic indicators. And you can use the traditional period, which is 14 days, but it all depends on which period you want to use. If it's 14 days, 21 days, 5 days, depending on what works for you better. But how, let me just explain in a simple terms. Okay, let's put it like this. The price is going up. This is first candle. This is second candles and bullish candles. So let me put it. This is the third candles. This is the highest point, the highs and the low. And maybe we have one other candle. This is kind of, I would say, a bearish candles. Yeah, let me make it to be a bearish. So how do you get the range of the stochastic indicators? It's kind of what's it called, the values. Sorry, I would say the value. It's kind of very easy. Let me say this highs is 100. That's the highs of the bullish run, and the low is 50. Just giving you theoretical how it works. So let's put the close of this bearish move was more or less 90. So how do you calculate it? We already know to get the value is from we calculate the range. The range is from from this high to this low. So in other words, right now we calculate from the close of the bearish candle and the lows of that beginning of that movement. It's kind of stay the same like this. You minus then before you divide. So that being said, then it's kind of very easy. You put like this, then yeah, let's put it like this. So this minus this, you get 40. 90 minus 50, you get 40. I'm not good in maths, but I think yeah, that is it. And 100 minus 50, you get 50. The same. I'm giving you this calculation how to get the values of stochastic. I'm giving you how to get the value of stochastics. So when you divide 40, okay, just a second, we're forgetting one other number, which is 100, because you multiply it by 100. So when you divide 40 divide by 50, I believe it's going to be 0.8. If I'm not correct, kind of simply type it on the board, because I'm not good in mathematics. I will just be frank to you. So 0.8 multiplied by 100, you will get 80. So this is the value of stochastic, 80. This is the why we got the value of 80. I believe you guys understand right now. So that is the calculation of this formula. So that being said, let's move forward. I already give you the theoretical parts. And why do we use stochastics? You might be asking the question, stochastic is almost similar with relative strength index, which is RSI, or this MACD, this divergence. So why do I want to use stochastic? Stochastic kind of is, when I was making research for this stochastic, I find it very interesting. It's kind of very interesting indicators, which in the future I will start using, because those people that knows me, they already know I usually just if I'm analyzing market, I use price action. I usually do the I usually use price action to analyze market. But when I was making research, and what's it called, trying to mess around with the chart, I will try to implement these stochastic indicators, and I see that it is kind of very cool indicator which I will be using in the future. Why? Because this stochastic indicators is kind of, number one, it makes you to identify a pullback, a potential end of the trend, or a pullback ending, or anyhow you can call it. That's number one. Number two, it makes you to, what's it called, the indicator gives you idea on where to enter the market and when to exit the market. I will explain that for you in a short time. And number three, it makes you filter the asset or the currency pair, whichever. So it's kind of very good indicators which I decided that it's kind of a good indicator which I will be using in the future. You can, but there's one mistake which a lot of guys is making, and that mistake is they don't know how to use the stochastic indicators. It's kind of very that's one thing about stochastic indicators. When some people will say, hey, this is stochastic indicator, is on over the is kind of above 80, I want to sell, below 30, I want to buy. Does not work like that. Though theoretically that is how they said it is, but if you go directly with that kind of strategy, boom, you'll still be losing money. I will explain for you how to use a stochastic indicator very good, because I've been messing around with it for a few days now, and it was kind of quite interesting on how to use the stochastic indicator. Let me just jump to the charts. Close this stuff. I'll use gold as an example. Number one, if you want to use stochastic indicators and you want to get it accurately, I will not just tell you that stochastic indicator is, oh, you want to buy, is on the is oversold or overbought. When it's overbought, you want to sell, and when it's oversold, you want to buy. Blah 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 blah. That is kind of correct, but one thing you need to do with the stochastic indicator, you need to first understand the trend of the currency pair. Why I said this trend of the currency pair, I will go back to this situation right now. So let me put let me just put it like this. Right now we see the on the daily time frame, Euro JPY, it's kind of on a downtrend. But I will not say this is a downtrend anymore. On the daily time frame, I will not say it's a downtrend anymore, because there's already a breakout through the upper boundary of a descending channel, and it's already developing what they call a new trend. Yeah, it's already showing a new trend. So you cannot call this a downtrend anymore, regardless, depending on where you put your highs and your lows. So you need to identify the trend of the market. How do you identify what is the trend in the market? The best way for you to use it is either to use your long-term simple moving average or exponential moving average, SMA, MA, or EMA. And I usually use 200. So why I told you that this Euro JPY cannot simply be said that kind of the trend is downtrend. Let me have this 200 simple moving average. Yeah, up to this moment, up to this point, I would say it's kind of a downtrend. But what are we saying? The price breached the upper boundary of a descending channel. The long-term moving average is already gradually below the price. It's even providing support at this point in time. So that's why I would say it's not a trending market right now. So you look for a proper trending market. So in other words, the gold USD, I will tell you that this is kind of a uptrend. The channel is telling me that it's kind of uptrend channel. Depending on where you want to put it, I can put it here right now. I'm seeing kind of uptrend market. I can see that the price is gradually moving towards the upper boundary of that ascending channel. I already identified, and the final one, I see my moving average, simple moving average, is way below the price action. So in the long-term plan, the gold USD is showing that the price is trading bullish. So now you want to that is where it comes how to use the stochastic indicators. I will have the stochastic right now, then I will explain for you. You can use it on the uptrend, you can use it on the downtrend. So some people, they will tell you, hey, the stochastic indicator was on the overbought zone, I sold and I lost, because you don't know how to use it. Some people will tell you the stochastic is on the oversold zone, I bought and I lost. It's kind of correct, because you don't know how to use it. So we had the stochastic. If I have it here, no, I don't have it. So I'll take this. This was the RSI which I was doing a few days ago. So I will add the stochastic. Yeah, stochastic momentum indicators. Damn it. I just cancel that. Yeah, before we had it, you can see this fast K and the slow K. This is where I will come to that in a little bit while. So take note on this fast K and the slow K. So that being said, yeah. So right now, when this currency pair which I'm looking at right now, I am seeing on the daily time frame, the price is trading bullish. And what will I be looking at before I will not want to jump into the market? Hey, the price is trading bullish, but technically it's already losing strength. What will I do? Maybe stochastic was telling me that it's on the overbought zone, I want to buy. Sorry, overbought zone, I want to sell. No. What you need to be looking for when the price is trading bullish, or when the trend is kind of an uptrend, you buy when it's on the oversold zone. You don't want to buy when you don't want to trade against the trend. Why I say you don't want to trade against the trend might not be downtrend, and because the stochastic is telling you the price is on the oversold zone, you want to buy. No, you don't trade against the trend, you trade in favor of the trend. So that is why you need to identify if the trend is kind of bullish or bearish. So right now this trend is bullish, the gold USD, it is bullish. What will I be looking for? I will be looking for when the price is located at the oversold zone, not the bought zone. Because if the price is over here, I want to sell right now, I'm trading against the trend. So what I do, I wait for a reversal for this price. They call it a potential pullback. Let me tell you that. So I'm waiting for a pullback. So let the price get closer to this 30 or below, then I'll be looking to enter the market to buy. Then I'm trading in conjunction with the trend. The same when the price is going downward. If the price is going downward, you don't want to continue trading against the trend. So that's how it works. You trade in conjunction with the trend. When it's overbought and the trend is downtrend, what you do? A downtrend and it's in the overbought zone, then you know that the trend, that sharp movement that was moving up on the descending channel is already ending, and you are looking to short the market. You don't want to start shorting when the trend is uptrend and the price is overbought zone. It might reverse and take you out from the market. So that is the major mistake a lot of guys is making. They don't know how to use the stochastic indicators. So finally, stochastic indicator makes you to understand the buy and sell. I will put it like this right now. Let me do it like this. Yeah, so you guys will see it. I'll put this. Number one, this is the crossover. I put it again. Number two, number three. So how do you use stochastic indicators to know how to enter the market, your entry and your exit? when the price or the asset, I want to say the price of the asset, when stochastic is above 80%, which is the value which I calculated earlier on today, and there's kind of a crossover here. This crossover was what? This moving average, you can see it there. The period is 14, and the slow moving average and the fast moving average. When the slow moving average cross the fast moving average and the stochastic is located in the overbought zone, you need to short. That's a signal. Yeah, let me put it here. This is a no, sorry. Okay. Trying to remove this stuff, it's not. Okay, I'll put it again. The stochastics. Okay, yeah, so look at the stochastic. I'll go back again. Somewhere this way. Okay, this arrow. So when it's slow, cross over the fast, and the price is above 80, you need to short the market, like you need to sell. This is a signal, entry signal to sell the market. And when the price starts going downward, this is a signal to buy or to exit the market, this zone. This is a signal to buy or to exit the market. The same with this of to buy or to exit the market. So this is how the stochastics work for you. It gives you signal to buy, it gives you signal to exit, it gives you the signal to filter your trade. In other words, let's take a look at the historical movement. Let's back test it. Let me say back test. This number one, the same. Number two, this one somewhere this side, yeah, this pullback. Number three. So maybe you might be asking yourself a question, okay, why am I not putting it at the top? The reason why I'm not putting it at the top, because I already identify I will take away that top away, but I will explain right now. So why am I not putting this signal at the top at this moment right now? At this topic, it might give you what's it called, the exit signal. It makes you to get the interested that maybe the trend, the pullback, not the pullback, but there maybe a potential pullback. That is when the price is trading bullish, and the small k, that is the slow moving average, already crossed the fast moving average above when the stochastic is in the overbought zone and the trend is bullish. It's giving you signal there's going to be a potential pullback. So you either be exiting the market or you readjust your stop loss. That is this signal which you're looking at. But this signal, this buy signal, it gives you the indication that the price is in the oversold zone and the trend is trading bullish. It gives you the signal to enter the market. This number one. Number two, what happened? We see a pullback. Let me put this. This is a pullback. This is a major pullback, a little bit pullback, but this is second pullback. So it shows you that movement. So guys, this is the stochastic indicators. We have it on the article is over there on our website. You might read more about it. If you have any questions, simply ask. And I'll just recap. Do not blindly trade the overbought or the oversold zone. I already explained it for you earlier. You don't need to buy The price in the overbought zone, I want to sell. Or the stochastic is in the oversold zone, I want to buy. Don't blindly trade the overbought zone or the oversold zone. Trade according to the trend. You don't want to trade against the trend. That is the beginning of failure for you in forex market or in stock market or so. That's the beginning of failure. That's number one. Number two, stochastics make you to identify a pullback. Not only a pullback, to give you I'll tell you when to exit the market. Okay, when to exit the market. Okay, you already got a lot of profit, you want to leave the markets, because some people are asking, my problem is I don't know how to sell when you're already like in the market. I don't know how to close my position. I don't know at what point should I close my position. You can use stochastic. It will help you to know when to close your position or when not to close your position. And the final one, stochastic help you to filter the market, to know a potential bearish move or a bullish move. So guys, that is the stochastic momentum indicators for you. In the asset and further question, see you next year, and I'm wishing you a Merry Christmas and a Happy New Year. However, I don't celebrate Christmas. I'm not a Christian, don't celebrate it. I would say wishing you a happy holiday season. Remain blessed and good luck with your trade. Bye bye for now.